the 2021 full-year earnings of cement makers in Nigeria show impressive growth as Dangote Cement recorded a revenue growth of 1.4 trillion naira. Meanwhile, Lafarge also saw a surge in its profit by 65% to 51 billion naira. Gbolahan Ologunro, research analyst at Cordros Securities, joins me to discuss these results. Thank you so much for your time today, Gbolahan. Let's first get to what you make of the earnings we saw. Quite impressive here.
So thank you for having me. Like you rightly mentioned, we saw very strong earnings from cement players in Nigeria. Looking at the industry leader, Dangote Cement, revenue expanded by 38%. For the Nigerian operations, Lafarge also delivered revenue growth of 27%, while Gbolahan Cement, the third player in the industry, delivered revenue growth of 23%. Looking at the drivers behind the strong growth in revenue across board, we observed that price increments played a significant role in the ability of cement manufacturers to deliver that impressive growth in revenue. And looking at Dangote Cement as a case study, we saw price per ton increasing by about 18% full year 2021, while volumes expanded by about 17%. So for cement makers in Nigeria, they have been compelled to increase prices significantly just to preserve margins from the impact of FX devaluation on their margins. So that has enabled these industry players to sort of, increase prices significantly. But more importantly, I think since the third quarter of 2020, when the economy was fully reopened, we have seen strong demand from private sector as individual home builders have, improved activities in the real estate sector. So that has also benefited industry players in 2021.
All right, but let's look at the dividend payouts here. Quite impressive here. And what has been that feedback from investors in terms of the dividends that were announced?
Yes, for Dangote Cement, dividend per share increased by 25% to 20 naira per share. Lafarge decided to maintain the final dividend for 2020, still 1 naira. That was what they also declared for full year 2021. So for Lafarge, investors were somewhat disappointed with the dividend per share declared by the company. Investors were looking forward to an increment to about 1.5 naira or 2 naira per share. But the company decided to maintain their final dividend of 1 naira, which is, in line with what they delivered last year. However, for Lafarge, we think that investors, are sort of not taking into account the fact that this company declared interim dividend last year of about 1 naira, so that a total dividend of 2 naira for 2021 full year.
All right, now looking at the market share dynamics, is the tilted anytime? Is the scale tilted anytime soon?
Yeah, so to examine the market share dynamics, you probably have to look at it from two different perspectives now, from a capacity perspective and a revenue generating perspective. So in terms of capacity, we've seen significant investment by Gbolahan Cement, and they have displaced Lafarge as the second largest cement manufacturer in Nigeria by capacity. However, in terms of revenue, not too much has changed. Dangote Cement still remains the market leader with market share of about 64 to 65% levels, closely followed by Lafarge and of course Gbolahan Cement. But in terms of capacity, we have seen a slight change with Gbolahan Cement overtaking Lafarge as the second largest cement manufacturer in the country.
Yeah, let's talk about some of those project pipeline and how they impact the output here. You mentioned Gbolahan Cement. Yes, I know the Line 4 plant was commissioned recently, and also they've done the groundbreaking for Line 5, and they also have other projects coming on board, planning to get up to 17 million metric tons next year. For you, the Dangote Group also has its development as well. Let's speak to what we're seeing in terms of the pipeline of projects that are coming up.
Yes, so in terms of pipeline of projects, Dangote Cement has already, launched 3 million line at the Obajano cement plant, in addition to a 3 million metric tons plant at Opela in Edo State. For Gbolahan Cement as well, we've seen a more aggressive expansion in their plant. The company intends to roll out about 9 million metric tons across 3 different states, in the federation going forward. So we think, the bringing this additional plant on stream will enable the company to sort of improve the ability to drive cement sales, which will be positive for revenue in future years.
But very quickly, how do you see the demand and pricing dynamics play out going forward then?
Yeah, so for us, I mean, we are concerned about the sustainability of the current pricing environment. Over the last 2 years, we've seen double-digit growth in price per ton, I mean, from cement players. So we think this year we're likely going to see increased sensitivity from the private sector. And you also take into account the fact that this year is the pre-election years. And in pre-election years, you tend to see more of cautious activities in the real estate sector because of uncertainties in the broad economy. From public sector demand for cement as well, we don't expect, I mean, any significant improvements in that space, particularly in the second half of the year, as we see preparation for the upcoming elections 2023, activities concerning primaries as well as rallies across the federation that will likely distract policymakers from implementing the capital expenditure in, I mean, the budget for 2022. For this year, we expect slower expansion in demand from private sector due to sensitivity to pricing, while public sector demand would likely be affected by, I mean, the upcoming elections in 2023. On the pricing environment, we think, I mean, industry players will struggle to replicate, I mean, the significant increments in prices implemented in the last 2 years. So we are likely going to see single digits or flattish growth in price per ton in
Okay.
2022.